So far, when I look at a trial balance, we have now seen that the nominal section goes to a thing we call the income statement. And we calculate there the net profit. But now, we're also going to do a statement called the balance sheet. And guess what? In the trial balance, there's a whole section called the balance sheet section. Imagine. So now, what we're going to do is I'm going to teach you the face. So in a balance sheet, we talk about the face and the notes. Okay. Now, what it means, when I talk about the face, it's this part here that I'm going to teach you. When I talk about the notes, it's what we call an addendum. So it's extra information. So if you look at the bottom, can you see there? Note 1 is interest income and interest expense. Remember, when I did the income statement, at the bottom, there's an interest income and an interest expense. So, for more detail, you actually have to do a note where you specify. Oh, I have interest on fixed deposit, interest on overdue debtors, interest on a current account, and then I total it. Let's say it was 10 Rand, 20 Rand, 1 Rand, then it totals to 31 Rand. Then I will transfer that 31 to my income statement. And the same goes with the interest expenses. Right. So can you see, we actually, when we talk about the financial statements, it's one big thing. It's the income statement, the face of the balance sheet, and then notes to them. So you will see that everything here is a number. This numbers here is the notes numbers. So note 3 will be for fixed assets. And this is the note. And I'm going to teach you this note next week. Then if you turn around, you'll see there's a note for inventory, a note for receivables, a note for, and so forth. Okay. Today, however, we are only going to look at the face. And for the next 4 exercises, so we're going to go through the 4 exercises again, we are only going to practice the face. I basically want you just to learn the format. It's really important that you know the format. Now, we're going to play with our highlighters. First thing I need you to see, can you see it divides into assets, equity, and liability? And now I'm thinking, I'm quite sure from grade 8 we did something called the AOL. Ne? And if you remember correctly, with the AOL, we said assets is plus minus, and the other 2 is minus plus. You remember that? And it's because my assets is equal to owner's equity plus liabilities. Okay, so what that means is in the end, and it's very black on your screen, but you can see it on your print. Can you see that those 2, that they balance? Can you see? They balance. They are equal to each other because your assets equal your equity and liabilities. The second thing I want you to see is the words current and non-current. Can you see here's a non-current and a non-current. Here's a current and a current. So what is that? So the difference between non-current and current is 12 months. So non-current is the things that last longer than 12 months, meaning longer than a year. Non-current current. Because current means now. What is current affairs? It's today's news. So, can you see your non-current assets would be your fixed assets and your fixed deposit. Your non-current liabilities is your long-term loan. Then what is current? Current is the things that changes daily or monthly, or it changes often within 12 months. And that would be your stock, your debtors, and your cash. Your creditors, your bank overdraft, and your short-term loan. Now let me go in detail with everyone. I'm going to tell you what goes in with each one. So, what is my fixed assets? My fixed assets is land and buildings, vehicles, and equipment. Right. Okay. Your inventory, and this word you must know, and it's very important that we know that inventory first, receivable second, cash third. And you can literally only learn those words. You don't have to write everything. You can write inventory, receivables, cash. It's fine if you write that. So, inventory is your trading stock. Receivables is your debtors control. Cash is my bank if it has a debit balance. If it's, oh, now I say band. It's your bank if it has a debit balance. It would be your petty cash. And what else? Cash float. And you know, sometimes they throw in a savings account just to see if you know. Your savings account, let's be very clear about this, is not a fixed deposit. It's not an investment. Your savings account is your most basic bank account, and most of you already have a savings account. Okay. So when your mom pays with her debit card, they always say, is it savings or check? And most of the time, your mom will say check, but sometimes she will say savings. Right. So it's your most basic bank account is a savings account. It's not a fixed deposit. Okay. So in other words, my non-current is that. Financial assets. Now let me just tell you that financial assets is like a little heading. And it would never have an amount there. Okay. It is because it's only your fixed deposits. Okay. So in school, grade 10, we only do, the only financial asset we do is a fixed deposit. And it's a financial asset because that fixed deposit is earning me interest. Right. Okay. That doesn't have to be a mortgage loan. It can also be a long-term loan. The difference is when I take out a loan for a very long period, I have to give the bank surety so that if I die, the loan will be paid. You get what I'm saying? So most people take as surety out a life insurance. So the life insurance covers the loan when I die. But other people will say they give their property as surety. So in other words, that is what we call a mortgage loan. So I mortgage my house. So the house that I'm buying on credit, when I die and it's not finished paying, the bank takes that house, sell it, and the money he uses to pay off my loan. If I have a life insurance, when I die, the life insurance pays out to the bank to cover my loan. Now my house can go to my children or my sister or whoever, and they are debt free. You see. Current liabilities, trade and other payables. Who wants to take a guess what that's going to be? If receivables is debtors control, payables is going to be creditors control. Bank overdraft is when bank is a credit balance. Now, can it be both cash and overdraft? No, because bank only have one balance. Okay, you guys get me? Can you see it can jump around? Short-term loan, I will teach you later. It's basically that part of the loan that I'm going to pay back. Now, if you look there, can you see there's a minus 10? And here's a 10. Can you see? So short-term loan is that part of the long-term loan that I'm going to pay in the next financial year. Okay, we will do this together, but first I want to teach you the format.